Alrighty, good morning, everybody. Welcome. Thank you for joining us this morning. We're going to run this like we did with the quarterly results if you were there for that. So I'll hand over to Stu shortly to take us through the half-year results and an operational update. And then if you could use the Q&A button to enter your questions, and I'll get those over to Stu for you. We are going to try and stick to half an hour, but yeah, I'll hand over to Stu.
Thanks, Emma, and thanks everyone for joining this morning. I see we've got a large number of interested parties. This morning, Strike released its half-year report, as well as a letter from our chairman, John Point and AO, and as well as the presentation, which I'll take you through this morning. Just to reiterate and echo some of the statements made by our chair, Strike has obviously suffered a significant decrease in the value of its securities off the back of the South Aragala appraisal testing. The company completely takes full responsibility for those results. They have generated some anomalous results, which I'll take you through shortly, and we are focused on maximising the value of the remaining South Aragala reserves. So without further ado, to move into the half-year report, whilst it may not feel like that, there are highlights in the report. At this time, given that we had started production in the first half of the financial year in late September, on the 25th of September, commenced production from the Walyering facility. That facility has performed strongly, and we produced around 2 petajoules of gas and condensate from that, with sales which are predominantly in the last quarter of around 15 million Australian dollars. In pursuit of Strike's ongoing strategic objectives of being the lowest cost and lowest carbon producer of gas in Australia, we're very proud to generate production costs of 51 cents a gigajoule. And the company entered into 44.4 petajoules of contracts across its Permian and Jurassic acreage in the Perth Basin, with Tier 1 customers South32, Perth Energy, AGL and Alinta. We also completed some M&A in the half through the acquisition of Talon Energy, where we've built out our Perth Basin portfolio, as well as consolidated our 100% owned interest now at the Walyering gas production facility. And during the half, as I said, we built and commissioned Walyering, which is a remarkable achievement, given that we've done it for $0.9 million per terajoule a day of capacity. That is, some 5 times lower than what some of the other developments are going on in the Perth Basin currently. To talk about what the year's performance and priorities look like, so we have generated our first full quarter or so of production from Walyering. We're now into well into a couple of petajoules or 3 petajoules or so of total production. The performance of the facility has been excellent. It's performed as designed. The subsurface performance of the reservoirs across the A to the C sands, with the D sand yet to be brought online. We're currently tracking to our 2P reserves case, which is good. So the pressure depletions that we can see on our P over Z plots are matching our estimated ultimate recoveries as per risks independent certification of the reserves at Walyering. The performance of the facility itself has been excellent. We've had top quartile performance and availability in excess of 97%, and our utilisation, unfortunately, is the only downside, where we have, as I've explained in previous webinars, that infrastructure attached to the Parmelia gas pipeline has somewhat been neglected in terms of its maintenance over the many years due to the lack of new gas fields being connected to the Parmelia. Those remedies are underway for our customers, which should increase the size of the PGP market. However, alternative customers right now on the PGP, outside of having secured Alinta, are sort of in the wrong phase of their contracting cycle for their gas. So that leads to Strike having underutilised capacity in Walyering, given that we have demonstrated that we can take the facility in the field comfortably to 34 terajoules a day and 275 barrels of condensate, which is above its existing nameplate capacity. We are looking to now, move through our priorities for the year, which sit around the maximisation of our production taking the facility in the field up to its nameplate or above and maintaining it there with the same level of reliability. And we're going to do that through increasing our market share on the PGP through actively participating in additional gas marketing activities, but also by potentially connecting the field through the Dampier to Bunbury natural gas pipeline, which could be done through a ongoing arrangement that Strike is working with APA on. We're also recognising the high margin nature of Walyering and wanting to extend that through the 3D reprocessing that we've done. There is a lot of near field prospectivity that has been illuminated, and that's going to start with the Walyering 7 well, which is due sort of west of the facility. You can see the facility in the map, a little yellow square. We'll be drilling a step out well from the facility out to Walyering 7. So a very small tie-in on success. If Walyering 7 is successful, and we should be taking the rig in April to commence that drilling, we will be looking to production test that well into the facility. So in terms of being able to generate revenues, that the time frame from drilling to revenue generation for Walyering 7 can be quite short whilst we work through the formal connection and development for Walyering 7, which currently estimated around $1.5 million. We are reviewing our safety case at Walyering, given the prospectivity of Walyering 7 and the potential flowability of both Walyering 7 and Walyering 5 in conjunction with Walyering 6 would mean that we have a lot more upstream capacity than what we currently have at our nameplate. We're looking at potentially taking the facility on a low to no cost basis by reviewing our safety case, which will take some months, but to take the capacity of the facility to beyond 40 terajoules a day. That is something that we are targeting to have ready by the time that a potential transportation arrangement into the Dampier to Bunbury natural gas pipeline is available to the company. And that can see not only increased revenues and sales, but also increased pricing as the DP, NGP market and the PGP market normalise, with an ability to transfer gas from one market to the next between different customers. And then finally, as you can see on this map, there are some significantly attractive targets that sit along the north to south extensional faults at Walyering, which we understand and believe is what's controlling reservoir development in the Cutover sandstones. And the company would like to move up to Walyering East in the northeast of the map that you can see in front of you, currently sitting in EP447, so not in the production license, and drilling Walyering East there. Walyering East, again, a large structure. And so between Walyering 7 and Walyering East, there's an opportunity to not only significantly increase the length and life of Walyering, but also increase that production capacity and expand and justification of expanding our infrastructure. So that is these are really important priorities for the business today. As highlighted in our chair letter this morning, the Walyering cash flows are very high margin, and they help underpin what is our very healthy balance sheet, having $114 million of undrawn facilities and cash on hand at the end of last quarter, with gas production and revenue generation heading more towards the $20 million than the $15 million that we had at the end of last quarter. Onto the unfortunately lowlights for the half and currently ongoing, South Araga's testing. The South Aragala wells after drilling, between Strike, its independent experts, all concurred that these were gas wells. When these wells have been brought on test, they both unfortunately have been produced water to surface as well as gas. We have been consistently flaring and producing water at South Aragala 2. However, what it has generated is results that will make the western side of the field quite challenging. And so as a result, Strike is firmly focused with its South Aragala development activities on the reserves that are underpinned by the South Aragala 1 discovery well that flowed 80 million standard cubic feet a day and no water So development activities will be focused on the eastern side of the field, which you can see highlighted through the South Arugala 1 well here. The results have generated some anomalous outcomes for the company, and to give a little bit more colour on that, some of the formation water produced from South Arugala 2 was of a anomalously low salinity than we've seen in the basin to date. Salinity is a very important factor in petrophysical evaluation, and independent petrophysicists that have conducted analysis on wells throughout the basin, as well as our independent reserves and resources auditors, would not have contemplated ever seeing salinities of this level in this part of the basin, and particularly at these depths. And if you apply those salinities to the South Arugala 1 petrophysics, unfortunately, South Arugala 1 would have only produced water. So you can understand why the testing or the sensitivity testing of various petrophysical inputs may have been outside of Strike's considerations at the time. That lower salinity water does explain the why these two wells have flowed water to surface. And it's something that the company is continuing to conduct additional testing on, understand the complexity of the structural setting that we have here at South Arugala, and how that may impact the potential development of the overall field. The South Arugala 1 well, again, a very strong gas producer, was put on test for a considerable period of time. We're comfortable with the reserves that sit around at South Arugala 1 and that are connected up towards the north, and we're going to look to focus our development there. Due to the lower expectation of the overall reserve that will sit at South Arugala, noting that the predominant reserves will sit at South Arugala 1, around South Arugala 1, Strike is reviewing its development concepts at South Arugala, where we are looking to maximise the value of every and each molecule of gas that we have at that location. And the development team are currently going through that process at the moment, discussing that with our board of directors. And once we've made some decisions on the best way forward and we have completed our reserves and resources review, we will make further disclosure on that matter. But in pursuit of our strategic objectives of continuing to be one of the lowest cost and lowest carbon producers of natural gas in Australia, the business is focusing on a cost out, 1.5 million cost out target on a per annum basis. Those three major blocks that will feed into that 1.5 million that we're hoping to achieve by the end of this financial year are around corporate costs, pre-FID development costs through aligning with joint venture partners, as well as maximising our internal engineering capabilities. And then lastly, we're also we're looking to take $754,000 out of our Walyering production costs, which are already as low as 51 cents a gigajoule, noting that our current quarter cost run rate is only around $900,000 per quarter for Walyering production. So, this is a continuous improvement cycle that we are on, and we are steadfast in ensuring that we run a very lean, mean business here, and that all the free cash flow generation that we have from this asset we can put into the development across our portfolio, which is a very exciting portfolio of multiple opportunities. Not only is there the West Arugala FID that we are targeting in Q3 with our partner Hancock Energy, but also South Arugala, a potential revised development concept there, and Ocean Hill, where we're currently acquiring 3D seismic. Those developments are currently situated in an excellent thematic, and I would say that the West Australian energy and gas thematics are only getting stronger, and I've got a really interesting chart to share with you on the next slide. But during the half, the gas statement of opportunities came out. We've also seen Kwinana reduce some of Alcoa reduce some of their demand through their Kwinana refinery closure announced for September of this year. And however, even with the reduced demand from Alcoa, we do see a market that is very delicately balanced, which will go in and out of deficit between now and 2030. And as we move into the 2030s, and the state's commitment to exit the last of the coal-fired power we have here in Western Australia, which makes up about 32% or so of daily electricity generation. We expect to see a substantial increase in gas demand in the electricity sector as the remaining supplies of domestic gas from the last 10 to 15 years move into terminal decline. That really presents a perfect opportunity for the Perth Basin as all external spectators of the West Australian gas market will highlight that the Perth Basin is positioned to be the major new incremental source of domestic gas in Western Australia, and therefore the state government, through its domestic gas policy inquiry, where we have seen an interim release only as early as a week or so ago, identify that stimulating the Perth Basin to accelerate and increase the size of its developments or the number of its developments, the continuing of drilling up new reserves is an important factor in ensuring that the state's gas market remains an affordable, abundant and competitive source of energy. We have ongoing engagement with the West Australian government, particularly Department of State Development, which is the cabinet is run by the Premier, and he's the member and the Minister for the Department of State Development. And he's made comments in the public domain around the potential repeal in part or in full of the current ban on exporting of gas from onshore sources or the Perth Basin. And that is around stimulating and accelerating those Perth Basin developments. You would have seen Mineral Resources make substantial comments around what they may do or may not do if a export license or export exemptions are granted across the basin, and that is something that may continue to stimulate further development activities for Strike. But as I said, a chart that demonstrates that our strategy, our development strategy, gas acceleration strategy, is the right one, is this picture here. This shows electricity demand and fuel sources over the 18th, 19th and 20th of February. Only very recently we had a heat wave come through Perth and through the state. And believe it or not, the top 6 electricity demand days of all time in Western Australia have occurred in 2024. So not only through our growing population, our increase in industrialisation and downstream opportunities for mineral processing, our desire to electrify everything, we've finally seen Western Australia become a 5 gigawatt demand centre, which was forecast not to occur for quite some time under the electricity statement of opportunities that came out about a year ago. And during these intense periods of electricity demand, gas has rallied as the major incremental fuel supply in order to keep the lights on, to keep the air conditioners working, and to keep our industry operating throughout the state. You can see 60% of electricity generated at around 6 p.m. In Western Australia on the 18th of February, when we hit our first operational demand record of 4,233 megawatts, was generated by 60% gas. Still 30% coal in there, with the state government's commitment to exiting that by 2029 and its commitment to the ceasing of subsidies of the Western Australian domestic coal mines by 2026, says to us that we are in the right place, in the right jurisdiction, and we have the right strategy. Regularly during this window of electricity consumption, electricity prices were reaching what's called the diesel cap in WA of $740 a megawatt hour. That has a substantial look-through value to the underlying gas. And this is something that Strike and its board of directors are focused on, and presents a very interesting opportunity for the business moving forward in how do we continue to support the electricity markets here in Western Australia. But to round out why we think that the company is completely undervalued at its current share price, and why the erosion of value on its securities is not, through the South Araga results, is not representative of our current suite of unique Perth Basin gas assets, we have a big year ahead of us still. We have the drilling at Walyering 7, Arala Deep, potential increase in capacity at Walyering, as well as the FID planned for West Aragala and the release of South Aragala's revised development outcomes, subject to the final testing phases at South Aragala 2 and 3. It's a big year. We're going to get 270 square kilometres of 3D seismic from Ocean Hill, which, Walyering has been the dress rehearsal for Ocean Hill. Ocean Hill is a much larger Jurassic structure. It's the same rocks. A well drilled in 1991 generated the same low impurity gas to surface when on test. And we believe that the application of that high resolution 3D will show us the areas of positive reservoir development, similar to what we've been able to identify at Walyering. And then a potential contingent appraisal well may bring the 306 petajoule equivalent of 2C resources, only certified by risk about a year ago, into a potential development and into reserve classification on successful appraisal drilling. The business is got a diversified situation from the Permian in the north to the Jurassic in the south. We've got cash flows generating at Walyering, which are looking to ramp up as we start to really take our position in the state as a meaningful and growing domestic gas producer. We've increased our number of contracts and available sources of customers that we have, and we're increasing our markets through potential connection into the Dampier to Bunbury natural gas pipeline as well. And we're still committed to bringing 4 sources of gas supply online by 2026. And so these South Aragala results, whilst have been a major setback in the company's desire to take an immediate FID at South Aragala, do not undermine the fact that South Aragala is a gas discovery and does have a reserve situated around it, and that does have substantial value that is not being ascribed to the company's market capitalisation today. So with a healthy balance sheet, those paying down debt, as well as those incoming free cash flows that we're generating on a daily basis at the moment, I'm confident that we can restore value. This is not the first time that we've had setbacks, and we have continued to strive forward. We have a resilient board and management team here, and I'm committed to ensuring that the company's securities reflect the value of the company's value. Now, I'm happy to take questions, and I'll keep the session open as long as questions keep coming in. Feel free to drop off the line as required, but thank you very much for your time.
Cool. Thank you, Stu. We've got a few questions lined up. I'm going to start with some based around our debt facilities. We've had a question from someone around whether we've had any indication from Macquarie that our debt facilities arrangements have been amended at all. And further to that, probably more to the point, is the Tranche D debt facility, which, for those that don't know, is the 40 million for the South Aragala wells. Is this still available, or has it been reduced based on lower reserves?
So last bit first, whilst I try to remember the start of that question, the facility has not been reduced. Macquarie currently has security over all of Strike's assets. As you can understand, that security package is worth a lot more than the $40 million of undrawn debt in those facilities. So no is the answer to that question. We have not had any changes to the arrangements of our current debt packages with Macquarie in the various different tranches, as well as the uncommitted but term sheet approved $80 million South Aragala development facility. As I highlighted, we paid down $6.6 million of our existing debt last quarter. And I think that demonstrates exactly how Strike has significant free cash flows and is got a very healthy balance sheet with only $19.6 million of drawn debt in that setup. So I'm comfortable where we are, and in fact, we're reviewing the balance sheet and our borrowing capacity on a regular basis.
Cool. Thanks. Yeah. So we'll move on to South Aragala. We had some questions around the whether fluid sampling was attempted during formation evaluation at SE2 and 3, And if so, why were you unable to get a water sample?
Sure.
And if no, why not? Yeah.
Yep. So the pressure gradients measured in South Aragala 2 measure on a gas gradient. When we had the RCX or the sampling tool in the hole, it was the last one because there's quite a lot of activity going on in the basin. It's the last one available. As we were looking to take a sample, that tool failed. The fact that the pressure points measured on a gas gradient was sufficient for Strike to feel comfortable there. We did take a gas sample at South Aragala 3, and that was sent to the lab, so that would also gave us further confirmation that we were sitting in gas wells. As you can understand, the physical results were gas and water, and so that, when you do take fluid samples, you do also bring a lot of filtrate into the sampling tubes. And so the salinities would be measuring very, very high based on the drilling fluids that would have been sucked into the samples.
Cool. Thank you. So having now had a few weeks to digest the results at SE2 and 3, has there been further petrophysical work done on the logs for these wells? And with these new calibration points, does it indicate that there is any remaining net pay in either of those 2 well locations, or is it totally saturated?
I'll do my best to answer this one. So we have done additional petrophysical work, and as I said, now that we know that the salinity of the movable water is very, very low, we have revised our petrophysical evaluations on those new data points, and that does explain why the wells would produce water and gas. The positive part of this is that we can see strong permeability in these wells out to the western side of the field, because obviously you need a higher degree of permeability to flow water than gas. When we went into the testing phase, the Strike's primary internal concern was how much gas would they flow based on the lower reservoir qualities that we had seen during the drilling versus the South Aragala 1 well. So it was surprising to us to see that water production. The resulting outcomes of pay, etc., is subject to the reserves and resources review that we're going on with NSAI. As I said, the western side of the field does look challenging, and we are focusing our attention and our development of the reserves on the eastern side of the field.
Well, on that, a question from April Lois. What is the time frame for updating the market on reserves and resources for South Aragala?
We're hoping to have the revised development plan and program and reserves and resources completed by the end of the financial year, to give market clarity on the way forward there.
Cool. So moving on from South Aragala, there is a question from Matthew Walker around what did you make of the interim report tabled, and how do you see the possibility of lifting the export ban for onshore producers? Does this currently matter much to STX now that South Aragala has failed?
I'll note that South Aragala is 2 and 3 have not generated positive results, Matt, and South Aragala 1 certainly is a strong gas producer and future source of sales gas. But to the interim report, clearly the initial findings were targeted at the existing LNG producers and how that they had been going about producing their domestic gas commitments that they had made to the state. My personal view is that changes to those regimes are challenging by virtue of the fact that a lot of the existing domestic gas sources and gas plants attached to those LNG projects are full. But then secondly, each and every one of those LNG developments is governed by state agreements, and state agreements are very long dated and very challenging documents to reopen and renegotiate and change conditions on. So I do see that there is a large amount of impetus on Strike and Mineral Resources and Beach and Mitsui to make the Perth Basin as successful as possible. And that is what I believe is creating the drive or the necessitating the potential stimulus package that would come through a reduction in the export ban placed on the Perth Basin. So I do think it's important for that part of the policy to be normalised for all players across the basin. I do see Strike as having around 20 undrilled prospects and leads in the basin, and I do believe that through successful appraisal drilling at Ocean Hill and potentially near field exploration at Walyering East, seismic acquisition at Kadathinni and Areno, and FID at West Erregulla, and appraisal near field exploration and appraisal drilling of Erregulla Deep, that Strike is going to have potentially large amounts of uncontracted reserves, which could provide an opportunity for the company to review its export positions if that policy is changed favourably for the company. So yes, is the answer to that.
So there's a bit of a follow-up question from that, which you might have just touched on. But if there was a change favourably, would this markedly change the current company's plans on gas prospect delineation, e.g. the Tathra Terrace, and possible new 3D acquisition across acreage?
Yes, and as you can understand, 3D acquisition is challenging, particularly in the basin, because of the intensity of land use that 3D seismic acquisition occurs. It means that you've got very defined windows, generally when the crops aren't on farms, in order to be able to pursue those 3D seismic acquisitions. And if you're going to conduct 3D acquisition over native vegetation, there's a long and challenging EPBC process that needs to be followed. I believe that a potential repeal of the LNG export ban creates an impetus to go and continue to work our way through our exploration portfolio, noting that the company is very committed to ensuring that shareholder value is maintained, we avoid dilution, and that we're maximising our opportunity set in front of us. So, drilling and delineation of reserves and shooting of 3D seismic for assets that may not reach development for many years to come, it might not be in the company's immediate best interests. I think we can see from what we've achieved at Walyering that the application of 3D seismic to the Jurassic sandstones, successful appraisal drilling, and the proximity of Ocean Hill towards the DBNGP, particularly compressor station that is there, could generate a very near-term development opportunity for the company, noting that we went from FID to first gas at Walyering within 12 months. And I think that we could do it better next time around, given the opportunity. So, I'm focused on making sure that capital employed has a near-term window of returning to value to the shareholders. So I think that, there's a little bit of a measured response there, you may feel, but Ocean Hill is a big 306 petajoule field, so it does represent a big opportunity.
Cool. And you mentioned a cutover of Walyering to the DBP. Do you envisage that this is going to require substantial capital from Strike to achieve this?
Short answer is no. It is a piece of infrastructure that APA is building within its network that would allow the company to access the Dampier to Bunbury natural gas pipeline. We're still finalising our agreements in order to be able to utilise that infrastructure. But as we understand, that infrastructure is currently under procurement and moving through its construction phases. So yes, it's considered a part of the normal pipeline network.
We've got a question from Declan on what are the implications for the Southwest Erregulla exploration well, given the recent flow test results?
It's a good question, Declan. We're currently engaged with our reserve and resource auditors around what the up-dip potential of South Erregulla 2 looks like, or are we, in a large migratory transition zone of Permian structure where the gas has passed through into a different area. The Southwest Erregulla 1 well is currently a commitment between in our joint EP469 joint venture with Waga Energy, owned by Hancock Energy. We're in discussions with Hancock Energy about some of our results at South Aragala 2 and whether that would change the joint venture's interpretation of the Southwest Aragala 1 opportunity. So it's a bit of a work in progress, Declan. There is only currently 2U prospective resource at Southwest Aragala, so it doesn't, if that opportunity does push out or is deferred into later on, it doesn't affect our existing 2P, 2C valuations.
Cool. I've got a question from Saul asking whether you can enlighten us on the status of pricing of the Wesfarmers contract, and is STX able to FID with the current pricing?
As you can understand, Saul, pricing is a very sensitive matter and covered by confidentiality in commercial arrangements. So I'm not going to make any comments around pricing of the Wesfarmers contract. That contract was struck in 2018 when the gas market was in a very different state of affairs than it is today. And Wesfarmers also made a prepayment commitment to support the very first well that we drilled in the Perth Basin at West Aragala 2 that discovered the West Aragala gas field. We are committed to getting Wesfarmers their gas and moving West Aragala through FID in Q3 of this year. We are looking forward to delivering that gas into that contract in a timely manner.
Well, we've got a few more questions back on South Aragala now. Are Strike happy that the South Aragala 1 remains viable and flowing? Has the flow on SE1 been checked recently?
South Aragala 1 is shut in. It's not flowing, thank God, because there's no development there right now. South Aragala, we just reviewed the well test again the other day. We're very comfortable with the connected volumes around South Aragala 1, and that South Aragala 1 will form the basis of a future source of sales gas. So, as I said, got an alternative development concepts that we're currently reviewing in order to maximise the value of each and every molecule that comes out of South Aragala. And we're looking forward to making further disclosure on that before the end of the financial year.
Ashley Chan has a question around cash statement. Slide 9 says Strike has 114 million of cash, but half-year report says 67 million of cash. Can you please clarify current cash position and debt position?
114 million, as I said earlier in this call, Ash, was cash and undrawn debt facilities, which includes the Macquarie facilities that have been mentioned earlier. So you're correct, and 114 is correct. It's cash and undrawn debt. And
she's looking for a rough total of cost net to Strike for Walyering 7, Ocean Hill, Southwest Aragala, Aragala Deep, and another appraisal well at South Aragala. Can Strike internally fund these exploration or appraisal costs from existing cash? The current committed activities, Ash, from Strike's perspective, are Walyering 7, which has a dry hole cost of around $10 million. Then we have the Aragala Deep 1 well, which is about $10 million Strike share. And then we're looking to move into West Aragala FID, which will be subject to its own commercial and financing arrangements. We're currently fully funded for all our committed activities, and that's also whilst we are generating meaningful free cash flows on a daily basis. So I'm very happy in it with a healthy balance sheet, and the company is in a very different position today than it was only 6 months ago, and we're looking forward to expanding those free cash flows as the year continues to progress. Thanks. Are you able to provide an update on the foundation GSA for South Aragala? Are these still able to be supplied or supported following the 2 and 3 result? Yeah, great question. So that's the South 32 Worsley Alumina joint venture, 20 terajoule a day domestic gas contract, and as well as the Perth Energy AGL 5 terajoule a day domestic gas contract. As we look to expand our production at Walyering and our delivery points into PGP as well as the DBNGP, we are discussing with our suite of customers about where they'll be willing to take their gas and in what timeframes. So we do value the fact that we have successfully negotiated GSAs with those customers.
we know that they need that gas, and we would love to deliver that gas. So, we are looking at our portfolio, South Arugala, West Arugala, Walyering, and seeing what's the best way to deliver them the gas in the volumes and the timeframes that they were expecting. So it's an ongoing discussion, but we are a seller and producer of natural gas, and so that is obviously something that they are looking to secure.
We've got a question from Matthew Walker around there being a lot of turnover post the ASX 200 inclusion and South Arugala issues, with a significant impact on the share price, which may make it vulnerable to predators looking to take advantage of the situation. Are we seeing any activity of note, and are you able to comment on the top 20, which hasn't been released previously?
Thanks, Matt. You're correct, and there has been some 15% or so of the company's securities change hands since the poor South Arugala appraisal results and testing results were announced. We have not done a look-through analysis in the intervening period of time. That does take a while to complete. We have some coming up. If there's anything that requires disclosure, the board will manage and continue to manage its continuous disclosure obligations and would make comment at that time. But nothing at this stage, and that is worth making disclosure on. Thanks, Matt.
Cool. I think that pretty much covers off everything. There is one last question around whether South Arugala is still probable of being developed as a standalone project, or will it likely be tied back to West Arugala? And on top of that, will the company report in TBD subsea as opposed to measured depth going forward?
Thanks. So will we report on TBD subsea? Not something that we've given any consideration to. Happy to do that going forward if that is a meaningful data point. Noting that the 1P reserves contour at South Arugala and West Arugala remain continuous. The first part of that, is South Arugala going to be a standalone development or tie back to West Arugala? Those are some of the considerations that the development organisation as well as the board will be making shortly. The fact that there will be gas plants built in the immediate vicinity, does bode well for the monetisation of South Arugala. But there are also alternatives. As I said, we are looking at maximising the value of each molecule of gas that we have at South Arugala to ensure that we can restore the market value of our securities that has been wiped off in the last few weeks. This has been a significant setback, and something that the board and I take huge responsibility for. However, these results have been anomalous to expectations, and unfortunately, it's going to take us some time, but we're on the way back.
There are a couple of extra questions in the chat feature. Do you see a need for any extra drill rigs in the area, and are there any plans in this space? That's
another good question. I'm a little bit frustrated at the moment by the delays in us receiving the rig back from Mineral Resources, who we have a rig sharing arrangement with. Any time that you put the drill bit into the ground, challenges are thrown at you, and I'm sure at times that we've taken longer to drill holes than what we would have planned or otherwise. With the improved prospectivity across our Jurassic portfolio, the shallower nature of those wells, as well as the really attractive high margin gas that can be produced from those low impurity sandstones and structures that we have there, there is. I am investigating what it would take to bring a medium-sized rig into the basin. Obviously, it has a smaller footprint, requires less land access, can be mobilised, moved quicker, faster, and easier, but does have limitations on being able to drill directionally, as well as being able to drill extended reach, and with certain different pressure regimes, and how deep it can drill. But we are looking at what a medium-sized rig would do for us in the basin. And whether it would be also supportive of workover opportunities across our Permian well stock as well as we move through into production operations there and conduct well interventions on a occasional basis. So, yeah, I think there's a bit more collaboration that can go on across the various operators, and we'll be having a chat with different joint ventures around whether we can put a program together for a medium rig and justify the mobilisation of it. So yeah, it's a great question.
I think speaking of collaboration as well, John has asked, would Strike consider selling gas into the Beach Waitsia facility nearing completion?
Yes. We are always, when we are not wedded to being infrastructure owners, and that is something that I think is an important part of our strategy, where we are upstream gas producers, and where that gas goes, as long as it's going in a way that maximises the value for shareholders, we are agnostic to whether we own infrastructure or not. One of the challenges with taking Aragala gas west, south, Aragala deep, etc., westward towards Waitsia, is that we will pass through a considerable amount of native vegetation before we reach the DBNGP easement that we could then travel up across and then into the Waitsia facility. So that would require significant environmental approval for the clearing of native vegetation and EPBC reviews at both federal and state level. And it's not as a simple process as you may think, or fast process as you may think. However, it does potentially generate a potential monetisation route without having to spend a huge amount of capital on gas processing infrastructure. I hope that answers the question.
Are Strike still looking at the South Aragala Wodgina to the east?
So South Aragala Wodgina, produced 35 million and then declined to 2 million, but looked like it would be steady at 2 million a day. There is a prospectivity further to the east of South Aragala 1 in the Wodgina, which is quite a heterogeneous sort of reservoir development. You can see that through the fact that South Aragala 2 and 3 did not have conventional reservoir development in the Wodgina there, but we did see it at South Aragala 1. So it's something that we're going to continue to carry as an opportunity going forward, behind pipe at South Aragala 1 for now, potentially an appraisal well sometime in the future. But if it doesn't have a way to be tied into a gas plant in a very near-term time frame, it's probably going to screen out for capital allocation at this time as we manage our balance sheet according to cash flows as well as borrowing capacity.
Cool. Well, I think we've gone a fair bit over time. Yeah, I think you've answered most of the questions in there. If any of the questions that people have asked have got lost or feel they're not answered, feel free to reach out. Post this. We'll have this recording live put up on our website. So you'll be able to find it there if you want to rewatch.
Thanks very much, everybody, for joining. And as our chairman wrote this morning, he and I are always available to answer anyone's individual questions. His phone number and his email is there, as is mine. Don't feel shy. Please pick up the phone if you have any further questions.
Great. Thanks.
Thanks, everybody.